The City of London, the heartbeat of the world's financial markets. Over 500 banks are based here. 350,000 people work here. Every day, over $1 billion in foreign exchange is traded. It handles over 50% of the global equity market. But this financial engine is stuttering as the global credit crunch bites. For many, it is the first time they've seen a real bear market, a market on the slide.
What's happened over the past few years is the banks have been overconfident, almost complacent, as the global economy was expanding. They didn't bother to check the assets they were dealing with, the valuations, or the risks. And in fact, this time last year, you could identify what was going wrong because you could see the spread, that's to say the amount that people were rewarded for taking on risky assets. And the answer was there wasn't any. So people were being far too complacent. Plus the fact, the idea that you had an awful lot of bankers that maybe hadn't seen a cycle come to an end before, an economic cycle that normally lasts every decade. Well, this one should have ended in 2001, but didn't because the American administration deliberately cut interest rates and expanded the economy and created actually greater levels of risk. Now those banks are having to suffer the fate of which they've helped cause. Why? Because what they did was they lent out too much, not understood the risks, and now we're all having to pay the price for it. It's not just a matter of a few city slickers being able to get their bonuses, it's actually spread into the broader economy. So it's gone out of Wall Street into Main Street, and not just in America, but around the rest of the world too.
For banks, there's now a frantic scramble for cash. Rights issues enabling banks to acquire money from their shareholders are huge and already looking a little desperate. HBOS asked its shareholders for $8 billion.
I think things have changed forever, really, in terms of banks, or at least until the next crisis comes along. For the next 10 years or so, I think banks will institutionally remember the trauma of the past experience and will act differently in the future. And you'll see a number of markets, for instance, the market for packaging up debt and securitizing it away, that market has more or less gone now. It might return in a smaller kind of fashion, but that's gone. Things have changed forever.
For some economists, the present financial malaise in the world banking sector is a matter of ideology allied to greed and inadequate risk management.
I think it's incompetence myself. I think it stems from the deeply flawed analysis that neoliberal economists have made of the global economy. Their analyses are deeply flawed and they are too arrogant to accept that, but they have no answers to the current crisis. They have no analysis of it. They have no understanding of it. And that's why finance ministers and central bank governors are badly served by today's academic economists.
I think it was greed, it was the push for profits, it's the fact that you tend to have these cycles with banks that last for 15 years where they go from being very kind of aggressive and handing out lots of debt to handing out no debt at all. And we were at the peak of that cycle. And we'll probably have a cycle like that again, but we really hit the peak and it was greed. And greed took over the market and greed won over fear. And now we've seen a big return to fear.
For the more pragmatic, there is an altogether different explanation which underlines the global interconnections of the world's financial markets.
The fundamental problem at the back of the whole financial crisis has been this imbalance between these massive surpluses that have built up in China and deficits in Western countries like the United States. And China has had a huge surge of liquidity that's been looking for a home. And they bought huge proportions of the US Treasury bond market, and that meant there was less securities available for everybody else. So for a long time prior to the crash, investors were looking for higher yielding securities, and that's why people started getting into riskier and riskier assets.
For governments, the pressure to bail out failing banks is intense. No finance minister can allow customers' confidence to dissipate and the consequent rush to get their money out. The banks are burning the midnight oil to realign the ways in which they operate. For how long will this state of affairs last? There are as many questions as answers.
This is likely to last, I would suggest, probably about a year, 18 months, maybe even 2 years. But the recovery is not going to be dramatic. It's going to be a fairly weak recovery. People will mistake green shoots, sadly, for advanced mould. And there will be rallies in the meantime, which people will get rather confident over. But fundamentally, the global economy is slowing. The global economy isn't going to recession. but it's slowing down. America will go into recession. Britain is probably partially in recession. Europe will slow down. But India and China will still grow, but at a slower, lower level. It will pick up again, but it won't be as dramatic as we've seen over the past 15 years in the United Kingdom and America. Why? Because we borrowed a lot and we spent a lot. Now you've got to pay it back.
I fear that people are walking around in a kind of haze. The sun is shining, the shops are still open, and people still have their jobs. That's not going to be the case for very much longer. And when people start to lose their jobs, which is already beginning to happen here in the United Kingdom, it's already happening in the United States, suddenly it's no longer possible to repay your debts. And then suddenly the reality of the crisis dawns. Unfortunately, by then it'll be too late. So we are due for periods of sustained unemployment, and it'll be as painful and as awful as it was in the 1930s.
Tracing the start of the crisis is contentious. Most of the headlines point the finger at the subprime mortgage problem in the USA, but there is an altogether more complicated explanation.
It's been gradual, it's been building, but on the 9th of August 2007, there was what I call a detonation, D-E-B-T-O-N-A-T-I-O-N, when banks froze, lost complete trust in each other and stopped lending to each other, and obliged the European Central Bank to issue something like $130 billion of liquidity, and the Federal Reserve $38 billion, and the Japanese Bank of Japan as well, in order to unfreeze the banks and to give them some money so that the money machine could start rolling again. That was the moment at which, if you like, the crisis detonated.
What is clear to many is that the crisis means that banking for many years will not be the same, and new ways of operating will have to be devised.
Well, I think, first of all, there's perhaps three things that banks are concentrating on. One is ensuring they've got the right amount of capital, another is operational excellence, and a third is being very close to their customers. They're fairly broad brush comments, but of course they are absolutely part of what you do if you're a business and there's economic issues and other difficult times. There are some aspects of business models which are being looked at on the broader regulatory context. They come under such headings as reviewing and reassessing risk controls, and the originator to distribute model, which is all about the securitization issues which have had some of this US subprime, that is being looked at an international basis. From our perspective, from our bank's perspective, we actually don't want authorities to do sort of knee-jerk reaction. What we want to do is sensible banking practices, good high-quality attention to customers, so that we can get through this rather uncertain time as quickly as possible.
For many of us, even those at work in the city, the problem has barely registered.
They didn't do anything that make me feel unconfident about them.
I think that we've been over the top now. I think we're going slowly but into the right direction now.
I trust the regulatory authorities that we have. Well, we hear a lot about it. I'm not sure how true it is. I mean, it's certainly talked about a lot.
No, I think the government will deal with it.
I have no reason to have any concerns.
I wouldn't be so happy if I was with someone like, I don't know, any of the other banks that seem to be kind of on the gossip mongers front.
Yeah, I think it's quite reliable. I mean, I'm using HSBC in London, so I think, till now it's fine actually.
I think they've made it a little complicated to get your money back as well, especially with the credit crunch. I think they're trying to hold on to it a bit more and make it a little more difficult for you to get it out of them. But yeah, I still wouldn't be enough to make me change to another bank though.
I have that confidence, yes. I don't think that in a normal personal banking account there's a lot to worry about with the main international banks. I don't think so. I sleep quietly.
The new world order in banking is seeing a sharp shift to the east, where the hothouse economies of India and China are the generators of cash and investment in ailing Western economies.
Sovereign wealth funds have taken massive stakes in Western banks, mainly in investment banks. The amount of money you've seen plunged in is similar to the amount of money the IMF gave out to Asian countries during the Asian financial crisis. So you're seeing this wholesale transfer of wealth. And this is part of the evolving economy. This is the fact that America is losing its superpower status and that Asia is starting to rise.
For the workers and traders in the City of London, the good times are clearly over and may never return.